Hey everyone, Andy Moss here, tradingadventures.com with your look at the weekly charts as we zoom out and take a bigger picture look at the price action from the last week and see what's progressing, what's changed, and what we may want to be on the lookout for in the weeks ahead. 3 weeks ago, we were looking at steady decline, orderly and without panic, as prices continued to go lower and lower below the 40-week or the 200-day moving average. And week before last, we noted a couple of things. It was the first real bounce attempt in the steady decline. We had a couple of potential washout signals and a DeMARK 9 buy setup here on the S&P 500 index, the SPX. And then so looking at the last 5 days of price action, we saw very strong follow through from that bounce attempt. We're now back above the moving averages. The 4-week moving average is flat here, and the price closed at a very slightly rising 20-period moving average, otherwise known as the center of the Bollinger Bands, which are still primarily flattening. So RSI is back above the 50% level, and volume still not quite back to the rolling average there on that. So not an incredibly active week as far as volume, but we do see significant price action there. Here's the SPY just to show you another flavor of the same data. And the Qs, of course, look very much the same. They also had this DeMARK 9 buy set up a couple of weeks ago. And I want to switch gears, zoom in from the weekly charts down to the 1 hour time frame on what I call the roadmap. If you've been following along here for any period of time, you know I mention this chart quite frequently. And the early tell that we've been looking for throughout this series of decline and subsequent bounce showed up. Not that we knew when it was going to show up, but this is an instance that I continue to point out is when we see a turn, if we see a turn, this is how it will develop. We'll see a series of higher highs and higher lows above a rising 5-day moving average. And that sequence was well in place before we got the very impactful news that a ceasefire deal had been arranged and agreed to in the Middle East with Iran. That's what sent the prices strongly higher here just a few days ago. And so that's why we use, again, the multiple time frames. We see the bigger picture view of the price action over here, and we can drill in to those smaller time frames to try to pinpoint when the meaningful changes are taking place, and that helps us keep on the right side of the action. Moving over to the DIA, the Dow 30 Index ETF, not quite as strong as the others. It's closed the week basically right here at a declining 10-week moving average, also known as the 50-day moving average, and this anchored VWAP off of the dip back in November that we've been looking at quite frequently there. The volume was very light, just a little over 50%. But RSI is back over 50% here. So rounding out the major 4 markets here with the Russell 2000 small cap index, it is like the large caps back above all the moving averages and not very far away from potentially a new weekly closing high. We do this, it's about the more accurate way would be to go from this closing high down to this week's closing high. That's about 4.5% below. So very close there to and really right in the middle of this price action that persisted for many, many weeks here at or near weekly closing highs on the small caps there. Moving on down the list here, we see Bitcoin is trying to get in on the action a bit as well, but it's just back to levels that we've seen recently that we're not able to hold. Is it different this time? I don't know. We'll have to see, but we do get, again, more positive development on RSI, though not back to the 50% level, but it is coming up from a deeper area than it was before. So a little bit of a dip here on a higher low there, and once again, the price is back to this anchored VWAP from this improvement attempt back in mid-January. So much still to be proven there for Bitcoin, but as it stands right now, it's looking a little better. The dollar rejected pretty hard after 4 weeks of testing this anchor off the highs back in January of last year. It fell pretty steadily this week and down into the area of the 10 and 40 week moving averages here. The 10 week is still above the 40 week. Both are rising. Maybe it provides a little support. RSI very close to the middle of the road here, and this could bounce next week or continue further. Either way, the volatility index came back in very sharply for the second week in a row, and moving overseas, we see the buyers were in control there as well, sending the all cap world ex-US higher once again. It looks not similar to the small caps in the development of the price action necessarily, but similar in the sense that it's not very far from its weekly closing high here now at this point. Within that index, looking at China specifically, a little bit of improvement here, but we've got this consolidation pattern for several weeks now. This is still a bearish consolidation below the 10 and 40 week moving averages. The price did close above a 4-week moving average here, and again, that's roughly equivalent to a 20-day average there on FXI, but no major improvement there despite the 2-week bounce in that sector of the market. Bonds, not a whole lot going on there. Again, some temporary stability and an overall downtrend here in the bond indices, the aggregate bond, the treasury bonds, and here's the high yield, as they always do, trading more like a stock index and coming up pretty strong, but not able to hold the highs of the week and closing back below a declining 10-week moving average. So just to recap what we've seen there in the equity and bond indices so far, some clear improvement there on the weekly time frame. Still not out of the woods yet, but it's no longer just a tentative bounce. The market has made real progress, and now, of course, we want to see if that progress can hold up and if the market can continue to build on that. Looking at the commodity group, we see a bit of retraction here in the GSG, which of course is very heavily weighted towards oil. And here's the action in oil over the last week. Big outside candle here as the really wide ranges persist. Not breaking down by any means. This is still just a bit of a rest in a very strong uptrend. And notice price did hold the anchored VWAP off of the breakout candle here back in late February. But the wide ranges persist, and oil continues to be very sensitive to and responsive to the news out of the Middle East, which makes sense with the Strait of Hormuz being such a vital artery there for those deliveries. Gold continues holding 3 weeks in a row of rise here after this bit of a sell-off, and not really any resolution there. Below a declining 10-week, above a rising 40-week, near the 61.8% retracement of this move from the low to the high in that time frame, and no real clear direction indicated there for gold at this time on the bigger picture here in all of this. Silver, of course, looks very similar, though maybe not quite as strong as gold. Now we'll take a look at our relative strength measures as we have growth versus value. Week number 2 back in favor of growth. That's the IWF in this equation, but still a bearish consolidation within a downtrend. The sharply declining 10-week moving average still pressing lower here. We are watching this RSI sequence here. Not exactly what we wanted to see for potentially a more durable bottom. Notice these last 2 times RSI actually hit a new low. Has not done that yet. Maybe it will, maybe it won't. But that's where the price action stands as of now in the growth versus value scenario. Versus consumer staples, we saw another strong week, or a stronger week in the direction of discretionary here this week, and it's above the sharply declining 10-week moving average. So more improvement there, but still I would call this a consolidation within a downtrend so far. High beta versus low volatility. No surprise there that on the second week of very strong price action overall in the stock indices, that the higher beta index was the beneficiary of more of that action than the low volatility, which also coincides with the decline we saw in the VIX index. Moving on to some individual sectors. Semiconductors continue to be just incredibly strong. This is the undisputed market leader, a very big green candle here and putting in a new weekly closing high that is well above the previous weekly closing high, 7.5% above this move from early February. And RSI now back above 70. Volume is just below average, but really impressive move there from the Semiconductor Index as indicated by SOXX. XBI also a strong move, though a bit indecisive here for the week on the whole, which is not to be surprising after such a big move and reversal last week. A little bit of rest here is not anything terribly alarming, but that's the action on XBI. And on the other side of the spectrum, software continues to be just incredibly weak. This slight inside candle last week, I think I mentioned that the early indication for this was that even though it was a green candle, it wasn't incredibly strong because it stayed well within the lower half of this previous large red candle. So continuation lower on the software index below this shaded area. The moving averages are all declining very sharply, and RSI is right here around 30. So nothing exciting for the bulls there yet on the software sector. Great. Well, that's awesome.
So we're going to sit here and drink beer until our house is ready.
Okay. I think that's a great plan. Your flights were... All right, pause. I think I missed the button there and got a little bit of a phone call, so I'll cut that out. But that wraps it up for IGV. Looking at the Mag 7, like the other major indices, this got a second week of follow-through bounce after that DeMARK 9 buy setup week before last, and it's still in, a bit of a no man's land here. It's above the declining 10-week, below the rising 40-week, and this price action here around 62 to 63, which coincides with the center of the Bollinger Bands and this flattening 40-week moving average. That could provide some resistance in the weeks ahead. We'll see how that goes, and that could be a major tell for the market overall. RSI here at approaching the 50% level. If it's going to rest and retrace a bit, this would be a place to see that turn take place in this coming week. The financial names, again, 2 weeks of bounce, but no major positive development here as it's right into the declining 10-week moving average. The energy sector, 2 weeks of sell-off right into a rising 10-week moving average. So this is all still very much at play and much more to be determined there. And then finally, we're going to wrap it up today with a look at the participation numbers and the percentage of S&P 500 stocks above a 50 and 200-day moving average. Continued improvement, which is not surprising given the price action, but notice the percentage above a 200-day is back over the 50% level. The percentage above a 50-day is not quite back to that level yet. So as we see this kind of be a little sticky when we approach that kind of coincides with what we just pointed out on the Mag 7 group. There is watching this percentage continue to increase over the first half of the coming week. Maybe it finds a little resistance there. I'm not predicting that, never prediction. We're just looking at some potential outcomes and try to be alert for and aware of what may transpire. So that's really the upshot of the analysis there this week. And where does that leave us all? It's back more in a situation of balance. We want to acknowledge the improvement without trying to get ahead of it. There's nothing to suggest that it has to continue. The news out of the Middle East continues to be very volatile and back and forth, but that really hasn't changed, and it could be a situation of the market kind of telling us that it just doesn't care anymore, that the worst is behind us, and this is not likely to transpire into something broader or messier or more damaging to the global economy, that kind of thing. So there's still a lot of overhead supply in many of these charts. So XX and was the only thing that's at a new weekly high, if I remember correctly. XBI is very close, but we saw signs of a bit of a slowdown there on that bounce. And so, markets don't go from a downtrend to an uptrend in one move. They take time to build. So if we are looking bullish for not only this coming week, but the next month or two, what we really would like to see is some rest and consolidation again in front of this level before we get a breakout move that takes us higher. That would be ideal. I say it all the time. The market couldn't care less what I believe to be ideal. But again, just one potential scenario that I would like to see, that I'll be on the lookout for, while staying very aware that we could just as easily reverse back down into this area, or we could have another very strong week 3 that blows right through the breakout level, traps a bunch of longs as they buy the breakout, and then pulls back. That's another scenario that we have to be on the lookout for. So we just don't know yet. And the good news is we don't have to predict. Just follow the sequence, use your multiple time frames, look at the price action as it develops, and just stay in line with the trend. And while we see what's going on here, this is now week 2 of a situation where we were fighting a headwind in the market for many weeks. Now we've seen a bounce, and now we've seen some follow through, and things are looking better. So if you're a swing trader like I am, you may notice things like swing long positions holding up a little better and getting a little better follow through. On the other side, short positions, if they're not in the software sector at least, maybe they're not working as well. Maybe they get stopped out a little quicker, or the breakdowns don't carry on as far. Those are all little messages and signals from the market that we can pay attention to as we continue to assess whether we're trying to go upstream or downstream against the current. So, once again, meaningful improvement from where we were 2 weeks ago, from decline to bounce to follow through, but we need to see continuation and confirmation. If the sequence continues, we can get a little more involved on the long side, and if it fails, we reassess. Same process as always. No need to rush. Just let the charts continue to develop. We'll keep tracking the same levels and see what changes next week. So have a great rest of your weekend. Remember, all of these weekly chart analyses are available on trading-adventures.com. Follow them. See how they string together week after week, and I hope you find it useful in your preparation for Monday morning and the weeks ahead. Talk to you later.